Hello, I'm Paul Seabridge, CEO of JWD Capital Partners PLC. You can contact me at ps@jwdcapitalplc.com, or you can find me on LinkedIn. What do I do? Well, I work with business owners for no upfront cost to turn around their business and create a minimum additional value of 500k in a 12-month period. And what I'm going to discuss today is some of the strategies that I use to turn around a business. So every business is unique. There aren't necessarily what might work for one business, might not work for another. So I'm going to talk more generically about business turnaround. So typically, we tend to find the sorts of businesses that we are working with are probably facing one of these problems. So it's probably got debts, as maybe personal guarantees to bank or creditors. Maybe they're behind with taxes, but potentially they could be in either some sort of insolvency or very close to getting to that point. So what we first of all look at really is what the problems are, and we tend to find that the problems usually are centered around one of these three areas. So the people, have we got the right people in the right places? The process, so the process usually tends to be around the sales and marketing function. So have we got the right people in the right places, ultimately doing the right things? And the financial side of things, so how is cash managed and controlled within the business? They usually tend to be the sort of areas that we start looking at. So as I said, every business is different, and sometimes there are other problems that I'm not going to cover in this brief presentation today, but usually we tend to find that it's something to do with either one, two, or all three of these things that are causing the business to ultimately be failing. So if we look at the people element first of all, so the first thing we'll look at in a business is what's the structure of the business. So let's say we've got a call center business. Let's say there's two sides to that business. Let's say there's a sales team, so people that make phone calls to generate revenue sales, and let's say we've got a customer service team that are there to look after the customer after they've actually purchased from us, so some sort of after sales support type role. When we look at the business initially, we might say that actually in the customer service pool there's some really good salespeople there that would add more value if they worked in the sales team, and vice versa. There might be some really good customer servicey type people that have got different skills that are currently in the sales team that would actually do better working in the other side of the business. So firstly we'll look at the people that we've actually got at the moment, and who they are and what role they play and whether they're in the right role. That will then give us an indication as to maybe where the gaps are. So let's say we are a widget manufacturer, so we generate our revenues from selling widgets. What would I do to improve the business? Well, probably one of the reasons why the business is perhaps experiencing cash flow issues is either it's not generating enough revenue, so there's not enough sales, so maybe we need to do something with the sales function. Maybe it's not got the right financial controls in place, or maybe it's spending too much money, so we look to cut the costs, and obviously that will then influence whether the business is going to make any money or not. So let's say it's a revenue problem, and we need to increase sales. Let's look at that. So let's look at our sales team and think, right, well, we're not generating enough sales. Why is that? So obviously we can train people, etc., etc. But let's say we're actually missing some talent. So what I would do is I would go and look at my competition, so other widget manufacturers that employ salespeople, and I will try and identify who is the best salesperson that I can get my hands on to come and work for me, that currently works for my competition. At the end of the day, your business is only as good as your people, so the better people you recruit, the better your business is potentially going to be. And then once we've got the right people in place, for me it's about making sure that there's some transparency, so they understand, they've got the clarity of what's expected of them. It's then giving them the guidance, the instruction, if you like, the competence, so they understand what they need to do and how they need to do it. And then there's the after effect, so basically the consequence. So if they do deliver what you want them to deliver, what does that mean to them? And also that consequence could be what happens if they don't deliver what you need them to deliver. What's the actual consequence of that. So that doesn't, if we use a sales example, that could be, your target every week is to deliver me 10 widget sales. If you do that, then this is what that means to you. Maybe it's a bonus, maybe it's a commission, maybe it's just recognition, maybe it's being top of the league tables. It doesn't have to cost you any money, but there does need to be a consequence to, if you meet your target or exceed it, this is what happens for you. And the guidance and instruction bit is obviously you working with that person and training them and coaching them and showing them how to actually sell 10 widgets every week. It can relate to absolutely any person in your business. So if it's a receptionist, it could be, I expect you to answer the phone within 10 seconds, and when you pick up the phone and say good morning, good afternoon, this is what I expect you to say to that particular caller. So that's not necessarily some training on how to pick up the phone within 10 seconds and what to say. That's just some instruction about, this is what I expect you to do and this is what I expect you to say. If it's the office cleaner, it could be making sure that they're aware that every day you need to make sure all the bins are emptied. So it doesn't have to be just around salespeople. This transparency, guidance, instruction and after effect applies to every single person from the bottom to the top in terms of what's expected. This is how you do it, and this is what it means to you if you do it, and this is what happens if you don't. So that there can be a good and a bad consequence. So we've got the right people in place. Let's now look at the process. So when we go into a business, we look at what we call the 5 C's. So here they are: crowd, conversion, continuity, cost and cash. So crowd, first of all, is the number of people that come into contact with your business that could potentially do business with you. So if we use our widget manufacturing example, let's say we sell these widgets online. So let's say we have 100 people coming to our website every single week. That's the crowd of people that comes to our website. The conversion is how many of those 100 do we then turn into a sale. The continuity is how many times do we get that customer spending money with us. So is it just they visit the website, they buy one widget, or can we get them to buy either more widgets or other products or services that we might offer. The cost is obviously the cost to the customer, so what do we charge them for a widget, and then if you multiply all those things together, that results in cash. So in terms of business, you've probably heard the saying, turnover is vanity, profit is sanity and cash is king. And whenever we're looking at a business turnaround, we're always looking at how we can generate cash. So it's not to say that we don't look at how we can improve revenues or improve profits. Maybe that's because we've increased the revenue or we're managing our costs better. But the biggest focus for us is always on cash generation, because if your business is generating cash, then your turnover and your profit are probably taking care of themselves. So if we have a look at those 5 C's in a little bit more detail, firstly you've got the crowd. So we will look at how we can fill that marketing and sales funnel. So how do we get more people coming to our website every week to buy widgets? So that could be advertising, social media, setting up referrals or joint ventures. There's loads and loads of things you can do to influence the crowd. But what we tend to find with most turnaround businesses is what a lot of people tend to focus on is how do they get more people coming to their business. So they focus on the crowd and they almost forget the other C's. Of all the C's, the crowd is probably the hardest thing to influence quickly, whereas the other ones you can probably influence very, very quickly. So if we look at those other C's, so we've got conversion. So in most business turnaround cases, we probably find what we call the leaky bucket. So this is, you've got lots of people coming to your website or coming into your interaction with your business, visiting your shop, visiting your premises, or however it is that they connect with you. But you don't have the necessary rigid sales process in place to make sure that you can convert more of those leads than you do today and turn them into actual sales. So that could be simple things like just looking at the sales process. So if you're a widget manufacturer and all your sales come online, how easy is your website to use? How easy is it to actually make a purchase? How engaging is it? How do you keep in touch with people that have maybe signed up to a newsletter online but not actually bought a product from you? How do you engage them further so that they do come back to your website and do make a purchase? Maybe it's special offers, whatever. If you're a service business, well, maybe it's not online, maybe people come to you face to face. What sort of process do you follow? Let's say you're a motor dealer, so your product is selling cars, and people come to your showroom. What process do your salespeople do to whittle out the good leads, the bad leads, and how do they convert those good leads into an actual sale? So it's always looking around the sales process. What can we do to make that process much more structured and rigid to ultimately convert more business? So the continuity piece, this is obviously getting customers to come and spend money with you more than once that they perhaps do at the moment. That could be anything around offering special offers, buy one get one free, 50% off your next purchase, whatever it is that you do to get that customer to part with cash more than once. We recently did a turnaround in an estate agency business, so this was a business that would get paid a fee for selling somebody's house. They only generated revenues from people selling houses, and let's say that fee was £2,000. Most people, when they buy and sell a property, usually need a mortgage to finance it. They probably need a removals firm to help them move on the day. They potentially need a conveyancing solicitor to help them do all the legal side of things. So we set up joint venture projects with some conveyancing people, some removals people, so that one customer that would sell the house that they would earn £2,000 from suddenly turned into a customer that would also buy a mortgage, a removals firm, and a few other bits and pieces, which meant that customer spent money with us more than once than they did previously. So improving that continuity. It could be that as a widget manufacturer, maybe you just sell black widgets today, but if you sold yellow and green ones, would a customer buy different coloured ones? So in other words, they will buy 2 or 3 products from you rather than the one that you do today. It's really looking at the sort of upsale side of your process. And the cost part is obviously what you charge the customer. Can you increase the cost even if it's only marginal? What impact could that have on the business? And then ultimately that all turns into cash. So if you've got your crowd of people, you convert some of those into sales, you get customers spending money with you more than once, and the cost that you're charging that customer is slightly more than you charge them today. That will result in more cash than your business generates today. So you can easily see, by influencing some of those other C's, the quick wins as I call them, rather than trying to influence the crowd at the top end, can have quite an impact on your business. And we're going to have a look at that in an actual example now. So let's go back to our widget example. Let's say we sell widgets online, and we have a crowd of 2.5 million people coming to our website every year that are looking to potentially buy widgets. So if we have a look at the business as it stands today, so here's some simple conversions. So you can see that we convert 10% of that crowd into sales. So 250,000 of the 2.5 million crowd buy a product with us. They only buy one product a year from us. The continuity is 1, and we charge the customer £1. So you can see that the 250,000 sales times by the continuity of 1 times by the pound is £250,000 in cash. So now let's have a look at an example of if we improve each of those areas by just 10%. So real marginal increase in the improvement of those 5 C's, and what that ultimately means. So we've improved the crowd, so maybe we're spending a bit more money on the online marketing, Google AdWords. We've improved the website so it's easier to make purchases. The crowd is improved by 10%, so 2.75 million people now are coming to us every year looking to buy a widget. We've improved our sales processes, so as I said, we've made the website easier to use, and we've got a sales team that now know when people call us to buy a widget, they've got scripts to follow, so the process is much more structured. So we've improved the conversion by 10%, so we now convert 11% of our crowd into actual sales. So you can see instantly there's a massive uplift there, that we're now selling 302,500 widgets every year. The continuity we've improved by 10%, so for every 10 customers we get them buying another product, so maybe that's a different coloured widget in this particular example. So the continuity now is 1.1, and we've increased our costs as well. So To buy a widget from us now, it's £1.10 instead of £1. So you can see, just by improving those C's just by 10% in each area, we've now got 302 500,000 sales. We've got customers spending more money with us more often at a higher price point, and that ultimately results in a cash result of 366 grand, which is a significant uplift, and probably in a business like this could be the difference between making a loss and making a profit. And then the final area that we tend to see as an issue is the financial side of things. So usually when we look at a business turnaround project, we spend the first 3 months stabilising the cash flow. So that could be just real simple things by putting some real simple processes in place. But in more complicated areas, maybe we use some form of insolvency to deal with some of the debts in the business to make them more manageable. I'm not going to cover that in this particular presentation because insolvency in itself is another topic, but we spend the first 3 months stabilising that cash flow. The sort of months 4 to 6 are looking at making sure we've got the right people in the right places doing the right things, so the people and the process element, and then really 7 to 12 months is us all reaping the rewards. So maybe that's looking at an exit strategy of, right, we turn the business around, it's time to sell it on, or maybe it's that we earn dividends out of it. Whatever that objective is, we want to turn this business around really within 6 to 12 months, but to do so you need to make sure that you've got the right financial controls in place. So simple things like making sure that the cash in the business is managed rigorously, people that owe us money, debtors, making sure that we've got a robust credit control process in place to make sure that any aging debts we're all over, we're trying to get the money in sooner than we do today, making sure that what we actually spend money on, our expenditure, is rigorously controlled, so there's probably budget controls in place. Again, not going to go into loads and loads of detail on this subject because this is a topic really in itself, but I'll give you a very quick example of how you can improve cash flow literally overnight in a business. Real simple example, and we have 7 of these that we would apply to a business. This is just one of them that does make quite a difference. So let's look at cash flow for our widget business. You can see here at the top you've got our customers. So this is in a month, there's 4 weeks. You can see which week of the month we've got a customer paying us money, and obviously what that money looks like. Underneath that, we've then got our costs, so we can see we're spending some money on rent, rates, staff wages, etc. And you can see the week of the month that they're going out of the bank account. And then at the bottom you can see the net result. So the red figures show the deficit in the bank account. So this is the money that we would need to, or the facility that we need to have in place to meet the cash flow demands of the business. So whether that be an overdraft, us putting some money in, whatever. So what I would do with this business to improve cash flow is, rather than pay everybody by bank transfer as tends to be the norm nowadays, is let's pay everybody by cheque. So if you post a cheque out today, second class post, it'll arrive with your supplier within 2 days. They'll take it to the bank, and then the bank will take somewhere between 4 and 7 days to process it. In other words, it won't leave your bank account for probably at least 6 days, 2 days for the post, 4 days for the process of the bank. So you've already created an extra week's worth of cash flow. So you're still posting the cheque on the day that the invoice is due or the day before, but you're giving yourself an extra week of cash flow. So you can see in this example, just by paying people by cheque rather than by bank transfer, you can see instantly how that improves the cash flow. So exactly the same example, just that it's taking a week to leave our bank account now. So you're probably not going to pay your staff by cheque because it doesn't normally work like that. So we've kept that in the same, but everybody else on that cash flow example is paid by cheque. So you can see instantly that there is now no cash deficit situation within this business in the month. So something really simple that you can maybe use in your own business today that could massively impact your cash flow. But that's one way to control cash flow, but it's very important to actually look at the cause of the cash flow issue in the first place. So whilst that can manage the process, ultimately the way you can improve your cash result is making sure you either increase your revenues or reduce your costs, and that will result in cash. But this is a way of managing poor cash flow until those improvements that you've made in the business, having the right people in the right places, doing the right things with the right financial controls in place, before those things start to have an immediate impact on your business. This is one way of perhaps being able to manage cash flow in the short term. So thank you for your time today. It's Paul Seabridge from JWD Capital Partners that's giving you a very quick overview of the business turnaround strategies that we tend to adopt with businesses. As I've said, every business is unique, so what this presentation has covered might not necessarily be relevant to your business, but we usually find that it's one of those key areas that need to be focused on, one or more than one of those key areas that need to be focused on to effectively turn a business around and do so quickly. If I can help you in your business, or there are people within your network that you think could benefit from a conversation with me, as I say, I work with business owners for absolutely no upfront cost to turn around their business and create a minimum additional value of £500,000 in a 12-month period. So-called turnaround experts usually charge thousands, if not tens of thousands of pounds up front to business owners, and when they're faced with a situation of a business that's struggling, further expenditure can be really unnecessary. So what I do is I will not cost a business owner a penny up front to turn their business around. And you might say, well, that's too good to be true, how do I make my money? Well, ultimately we'll look at a business, we'll assess it. If we feel we can help and work with a business owner, we'll set a target in terms of this is where the business is at today, it's in debt, it's got cash flow issues, whatever. I've already said that we'll create a minimum additional value of 500k, and we'll look at what the value we can create in that business over a 12-month period, and what that turnaround might look like in terms of the numbers, and then we will expect to be paid something for our hard work and effort, but it's all based on success. So unless we're successful in doing this and turning the business around and generating the target that we discussed, we don't get paid a penny. So it's very much, we're incentivized to work with a business owner to turn their business around. So if you think I can help you or people that you might know, then please do get in touch. You can find me on LinkedIn, or you can email me ps@jwdcapitalplc.com.